Hi, and welcome to my daily market report. I am Mike, and this report is about mortgage rates, what influences and what impacts them on a daily basis. And we go into the more of the trends, and if they're going up or down, sideways pattern. We kind of look at hopefully upcoming news that might impact it for the week, and kind of give it a gauge or idea as to what to expect with mortgage rates for any given day or week ahead, or if there's a long-term trend or short-term trend going one way or another way. So we don't get into at quoting rates primarily because there's plenty of places for that. However, there's a lot involved with those rate quotes, so it doesn't make sense for me to get into all those because there's a lot of variables from occupancy to credit scores to type of property to obviously the different loan programs and such. So there's a lot of different variables that go into it, and just for me, it would be a little too much for this report to kind of start quoting those, and especially if it can change on a daily basis, it's not worth my time. So, a little bit about myself is I am a loan officer, and I work with a national lender. So if you guys got questions about mortgage programs, mortgage rates, if you guys would like me to talk a little bit about maybe scenarios you have in regards to getting pre-approved and buying a property, to refinancing, different ideas on what you can do for refinancing. Please feel free to reach out to me anytime. I love talking about it, so it's definitely a passion of mine. So without further ado, let's kind of jump right into the today's economic report. We got a couple items here. We got really three main items here. Two of them are HPIs or home price indexes. The first one is the Case-Shiller, which goes over the 20 top largest markets. So this is for the month of February. So in January, it rose 11.1% year over year appreciation. Forecast count for 11.7 and exceeded that to 11.9%. So as you've been aware, we've been having some very hot appreciation levels, and we'll have to kind of watch see when when we may see a cool down on this. We also got this one's by the FHFA Home Price Index, and this is more for conforming size loan programs. So these kind of take the data from conforming loans and use that data. So this doesn't include your jumbo loans or FHA or any of those other programs, just the conforming. And those home prices had a revision in January from 12% to 12.1%. Then it had a slight uptick to 12.2%. So again, very hot levels. We're starting to see right around the 12%. Most of the HPIs are right around the 12% range year over year on average. Of course, we got smaller markets or different markets could be higher than that or even lower than that, but this is a national average. Consumer confidence jumped up. We had 109.7 back in March, and it was actually revised a little bit lower to 109. Forecast gone for 113, and it jumped all the way up to 121.7. So this is a 14-month high right here. So people are feeling a bit better about things. Of course, when you get stimulus checks, people are probably feeling a lot better about where things are at, and things are reopening. We're starting to see some light at the end of the tunnel, so hopefully we can keep moving along here. We got something here called the 7-year note auction. I don't normally would mention this in our economic reports, but it could potentially have an impact on our mortgage rates. Um, February had a poor showing on the 7-year note. This was a lot of it had to do with the Japanese selling off. They had their retirement systems around March timeframe, and they were repositioning their retirement systems. So they had a big sell off on on the 7-year notes at that point, and we had a pretty big crash. So a lot of there's really no direct, except for maybe timing that would go into this. But this auction could potentially have a bit of an impact on our mortgage rates today. This will be out 10 o'clock West Coast time, Pacific Standard Time. So stay tuned for that. That could, again, potentially move the markets a bit as it did in February, which was not favorable for mortgage rates. Let's jump ahead to the headline news. Stocks are a little mixed. S&P, I believe, was the only one that everybody was down negative territory, and S&P, I believe, it was the one that just went into positive territory. For the most part, they were all in negative territory. Um, we had Q1 earnings reports coming in pretty well. Tesla um, exceeded expectations, but I guess they just missed their mark on the number of sales, so they're down a bit today as well. So the big headline was more the tech companies. We have some big tech companies having their, Tesla came in after hours yesterday, and we got a couple more. I think Alphabet's coming in today, and maybe Microsoft after hours today. So these will be the impact for this week as well as even next week. Today will also be the first day of the FOMC, which is the two-day meeting that the Fed members get together and meet. They're expected to give their announcement tomorrow. We don't anticipate any changes in terms of their language. They've been pretty consistent for a while now, and but one thing, one of the whispers I'm hearing is if they sound too rosy, then they may get a bit. Investors may not be too excited because if it sounds too rosy, that means higher inflation, and if they're not going to change the policies, that could become a problem down the line, and that has been the concern of many investors over the last couple of months. So that's why we saw some very big spikes in yields. So we'll have to kind of watch and see. Hopefully, it keeps it at a tepid pace where it's not too hot or not too cold, just kind of right. The Goldilocks method, I guess, is the best way to describe it. Whereas, just give it to the right amount of energy, so that way people are happy that we're moving forward, but it's not too much and it's not too cold. Um, so, in any case, let's jump ahead, take a look at our mortgage rates, see what we're doing today. We're down about 6 basis points so far today. We were start off even lower. We pulled up a little bit. You saw this. We had a pretty big change rate in here yesterday, and so we're down about 6 basis points so far today. No change in pricing. I'm sorry. Give you a heads up. We did drop down about 14 basis points yesterday, so some lenders did reprice for the worst yesterday, as we did close down 14 basis points. However, those who did not could come in with that worst pricing today. So it depends on the lender. If they did reprice yesterday for the worst, they'll probably remain unchanged. If they did not make a change yesterday, they may put that in today's pricing. Here's yields. We're just under 1.57 so far, as we've seen. And again, kind of testing the 50-day moving average here. So, anyways, hope you guys have a great rest of your day. Thanks so much for watching. Again, if you guys got questions, please feel free to reach out. Otherwise, we'll see you in tomorrow's video. Thanks for watching. Bye-bye.